The Lehman Brothers scandal refers to the collapse and bankruptcy of Lehman Brothers Holdings, Inc., one of the oldest and most prominent investment banks in the United States. The event occurred during the 2008 global financial crisis and played a pivotal role in triggering one of the worst economic downturns since the Great Depression. Lehman Brothers was founded in 1850 and had a long and storied history in the financial industry. Over the years, the firm had grown into a major player in investment banking, securities trading, and other financial services. However, in the early 2000s, the firm became heavily involved in risky and complex financial products, particularly in the subprime mortgage market. The subprime mortgage crisis began to unfold in 2007, as the housing bubble in the United States burst. Lehman Brothers had invested heavily in mortgage-backed securities, which were bundles of home loans that were sold to investors. As defaults on subprime mortgages increased, the value of these securities plummeted, causing severe losses for the firm. In an attempt to mitigate its losses and shore up its finances, Lehman Brothers engaged in accounting practices that masked the true extent of its financial troubles. The firm used a technique known as Repo 105, which involved temporarily moving assets off its balance sheet, making it appear as though it had reduced its leverage. This practice allowed Lehman Brothers to show a healthier financial position than it actually had. As the crisis intensified in 2008, investor confidence in Lehman Brothers waned, and the firm faced a severe liquidity crisis. Despite efforts to find a buyer or secure a government bailout, no rescue plan materialized. On September 15, 2008, Lehman Brothers filed for Chapter 11 bankruptcy protection, making it the largest bankruptcy filing in U.S. history, with over $600 billion in assets. The bankruptcy of Lehman Brothers had far-reaching consequences. It triggered a severe credit freeze and a crisis of confidence in financial markets worldwide. The interconnections among global financial institutions, many of which had exposure to Lehman Brothers, led to widespread panic and a severe contraction of credit availability. The resulting financial crisis had a cascading effect on the global economy, leading to widespread job losses, foreclosures, and a deep recession that affected countries around the world. The Lehman Brothers scandal prompted widespread criticism and calls for increased financial regulation and oversight. It also led to significant changes in the financial industry, with many investment banks re-evaluating their risk management practices and reducing their exposure to risky assets. In the aftermath of the crisis, governments and central banks took various measures to stabilize financial markets and stimulate economic growth. Lessons learned from the Lehman Brothers scandal have informed financial reforms aimed at preventing a similar crisis in the future. However, the impact of the 2008 financial crisis continues to be felt years later, serving as a stark reminder of the dangers of excessive risk-taking and inadequate oversight in the financial system.